you can be changing people's lives, right? From retirement standpoint is where they had a small pot, but over the years you've been able to help that money increase and double, and then that doubles again. It's just like, I mean, it's like cool. It's a cool feeling to be able to do that because that's what we're doing, and that's why I said in the beginning we're working for them. You said like they're our customers. Yes, they're our customers, and we have to give them results.
Welcome to the Path to Passive podcast, where we talk about building wealth and empowering lifestyle through commercial real estate investing for tech professionals. I always wish that other tech professionals reaching financial freedom had documented their journey along the way, so I'm doing it for the rest of us. Join us as we explore stories, many failures, and lessons learned along the way. I hope you enjoy and subscribe. Danny, I am so excited to have you here. I remember us just meeting for the first time in San Diego for our Raise Masters retreat, getting to know each other a bit, really quickly over lunch. And it didn't take long to, talk to each other and just realized, oh man, this guy has got his stuff going on. And, as you got to tell me a little bit more about your background of how you started, and your attitude through getting into the business to thinking about how you can skill stack and just having a longer term vision to keep on building and building and building. I really was thinking, how can I work with this guy? How can I provide value? What can I do? And so, I'm super excited to have you on the show as a seasoned multifamily operator. I think in business, like over 26 years or something around that.
25. I'm at 25 right now.
Yeah, 25 years in business. You're deal maker, builder, the finance background as well. You really understand the nuances of real estate, of how money works, working with people. And so I'm super excited to have you here to talk about, your perspective, not only on real estate, but what it takes to build trust, grow your business, and execute with confidence from a value perspective. So super excited to have you here, man.
Thanks. Yeah, thanks for having me, Steve. Yes, it was great meeting you and getting to know you a little bit more. We went and we had breakfast together. What better way to get to know somebody is by sitting in front of them and just talking.
Yeah, totally. So 25 years. Just give that quick background because it was so cool to hear from how you got started and some of those points, your decision making from going from one really chapter of your life into moving of the next through these 25 years. Talk to me about how you started and how you got to where you are today from. Yeah, I'll let you talk. I'm so excited to hear about that again, but it's just a cool journey.
Yeah, no. So basically, what I've always been lucky enough to have direction and kind of dreams that I wanted to accomplish. And my first career was in building. I wanted to be a builder, and so I went to school. I kind of learned the building industry, and I was lucky enough to be able to become a contractor at 21. So I did residential building, which was great because we built homes, we built room additions, and that's never knowing that I was going to be able to utilize those skills and what we do now. And then being in the residential building, I also switched kind of not careers, but the type of projects that we did into heavy construction and learned how to kind of run crews and how to operate under intense pressure, meeting deadlines. So those were the skills that I was able to take from that. And then somewhere along the line, something clicked in my mind and says, hey, you know what? I don't want to do this anymore. And I says, you know what am I going to do? I kind of looked up. Back then there were no computers, there was no Google. So I actually went to the bookstore and I bought a book on careers and the education that you needed and the amount of money you make. And I figured by that time I knew I was good with numbers. I like numbers, so it had to be something with numbers, and it had to be on the West Coast. I didn't want to go to the East Coast. I already had roots out here, and decided on being a banker. So I needed to get a finance degree to be able to accomplish that. Was lucky enough to get into USC and got a corporate finance degree, graduated from there, became a banker, and we did loans in banking between 25 million to over $1 billion.
Long
So
standing.
that's where I kind of cut my teeth in on the finance side, from going in there with these large clients, and they were non-real estate loans at that time, right? They were working capital lines and acquisition lines. And when somebody comes in and asks you for $500 million, you got to understand the business, you got to understand the industry, you got to understand their footprint, you got to understand primary sources of repayment, secondary sources of repayment if they can, in case of the default, collateral, UCC filings. You create covenants, you create reporting requirements, and this is all the stuff that we work with now.
Hmm.
We don't really create it anymore, but it makes you be able to understand it really easy in a
Try to
sense.
speak the language. Definitely.
Right, right. But my dream was always to buy apartment buildings.
Mm.
And the reason why I liked apartment buildings is because I knew they created stable cash flow. And in creating stable cash flow, you can think about having kind of a secured life, the freedom, being older and not having to worry about money. You don't want to have to worry about that, but you have to pay your dues to be able to be in that position. So I was saving money. And I literally had a game plan where I saved, and I believe it was about $416 a week. So I was a
Hmm.
W 2 employee, and for years I saved, I saved, I saved. I was able to save $65,000 in 99. In 2000, I went out and I bought my first 4 unit building here in Norwalk, California. And a year and a half later, I sold that for $100,000 profit.
Nice.
I go from 65,000, now have 165,000. I learned about 1031 exchanges. I exchanged into another building, saved, bought another one, and kind of did my own with my own money for about 15 years.
Mm.
But at the same time, because I had built a small portfolio, I kind of created a systemized way of managing my portfolio. And I'm like, wait a minute, I have this already built. Why don't I just do third party management at the same time? Get paid
Sure.
for it,
Scale.
right?
Yeah.
Yeah. So in 2006, I started a property management company. And, being in California, operating in LA County, Orange County, but California is very difficult to operate now. So I sold the management company about 4 years ago. I said, you know what? I just can't keep up with all the new regulations that they're coming up with. But at the same time, about 2018, a friend of mine had said, hey, listen, he goes, I see what you've done. He goes, why don't you syndicate? And it was
Mm.
like, oh, I said, what does that mean? He goes, well, my mom and dad invested with a syndicator in West LA, and they made a lot of money. They ended up buying multiple houses up in West LA, and they put us through college. And I'm like, oh, that sounds interesting. So I'm taking what I know now, or what I knew at that time. I just needed to learn how to raise money.
Yep.
So basically, the shift was working for investors, because that's what we do, right? We bring investors into our deals, and they're our bosses. So we're helping to improve their lives by picking the projects that we pick, and by giving them the results that we want to give them. And so I basically learned, I hired a coach in 2018 and 2019. We went out, started buying deals out in Arizona. And since, we've got multiple projects that we do, we've exited on a few, done a lot of deals now. And so I have pretty good experience. I want to say it's relatively easy for me to go in there, regardless of the game plan, whether we're going to do heavy renovations. When we have teams already in place,
Yep.
and I'm able to bring the teams together. I'm able to beat schedules. I'm able to stay on budget, which is super important. And then the lease up, just run tight operations, and we're able to produce good results that way.
Yeah, 100%. Going from, swinging hammers to running crew to figuring out, what does it mean for the customer, right? And how can you
Hmm.
build something that the customer actually wants, and at the same time
Right,
learning management and leadership skills. It's like
right, right.
how to get people motivated, how to make sure they show up, how to make sure you have the right standards, how to make sure they
Hmm.
are supported and equipped. And then learning corporate finance, really understanding the numbers, putting it together
Right.
into larger and larger scale stuff. I mean,
Hmm.
you know, like you said, over 25 years, there's a lot of skills that get skill stacked, and it does
Right.
not happen overnight.
Mm-mm, mm-mm.
um, and I mean, as you know, I've talked to you a bit about my background. That's who this podcast is for too. It's, for tech professionals, people
Mm-hmm.
in our, the business. We usually hear it's like, oh, high income earners, doctors, lawyers, engineers. I'm like, yes, and tech professionals for sure.
Right, right, right.
Um, that are definitely looking at how can they continue to leverage and compound their skills and what they're doing, what we're doing, because we understand that takes time
Mm-hmm.
as well as make money on our money. That isn't, hey Danny, should I go and get into real estate and do a single family home, or should I get
Yeah.
an Airbnb? Like, how do you leverage and partner with others too, right?
Right, right,
You said investors, you know, it had our bosses, but really they're our customers, right? Um,
right, right.
really our
Yeah.
customers. So talk to me how you put that together today. Prime Capital, that's your firm, right? And
Right.
what's
Correct.
that vision there? And tell me about what that business model is, just briefly, on how you really help your investors to make money
Mm-hmm.
on their money. How does that work? You're talking about syndications.
Yeah. So what we've done is we've spent time developing relationships with brokers. All the deals that we buy now are off market deals, which gives us better leverage going into the acquisition. Now, it takes time to build those relationships with these brokers. They need to get to know you. They need to like you, right? If they don't like you, you're out, right? So you got to be nice to people. I always say, be nice to everybody, right?
Sure.
Visit them. So in building these relationships, when I visit, if I go to Phoenix, Arizona, wherever I go, my rule of thumb is pick two brokers to visit.
Mm,
It's not a lot. It's not overwhelming. You can fit it in your schedule. And whether I set up lunches, just maybe coffee breaks, dinners, happy hour, and if they're busy, I'll go to their office and I'll sit there 20 minutes, just stop by, say hi. So that's been able to build the relationships. Also, doing acquisitions in the area, they know who you are. They see that you're a closer. That's the biggest thing, is that they send a deal to you and you commit to it, you better close. Make their job easy, right? If you're a difficult person, you're over negotiating, you're retrading deals, you're out. That's the last one you get, right? So that's what we do. Is the deals come to us, we analyze them, we decide to pursue them, and we like them, then we put them together. And putting them together means doing the purchase agreement, going out and putting your whole team together, your SEC attorney, your transactional attorney, your accounting team, to make sure that they're in line with how you set up your operating agreement, and you can deliver to your investors. Going out and your survey, your debt, your lenders, just it's a whole team that you put together. You just make those calls and you say, hey, we're going from 0 to 60 here.
yeah.
Got to be done in 60 days. And then reaching out to your investors at the same time and saying, hey, listen, I got this deal. um, why do you like it? Why is it worth for them to invest? And what value are you going to provide for them that's going to make them want to invest? But before getting the deal, I always say you're always fundraising. So
Hmm.
you're always building relationships. You're continuing the relationships that you have with investors, with private equity firms, with maybe high net worth individuals, with family offices, whoever your group is. You can't just sit the sideline and all of a sudden a year later show up and say, hey, guess what? I got a deal. I got to raise $5 million. Are you guys in? It doesn't work that way. You have to be constantly talking to them and being able to say, hey, when you turn it on, they say, okay, I got you. I know you. I like you. I trust you. Okay, I'm gonna put some money in and see if we can make this work. And
Yeah.
then at the other once you get there, now you have to deliver too, right?
Oh yeah.
So now, what's your business plan? How you're going to execute? Investors like distributions,
Yep.
right? So they like money coming in. That's what you have to focus on. making the project successful so that you can deliver to the investors.
Yeah, I mean, up until the point of acquisition and close, it's all business plan. And I mean, it
Yeah.
even better, it's, you have the experience of having done it, and like you said, having
Hmm.
gone full cycle, meaning the entire business plan, putting things together, actually getting the financing together, knowing what to do over the next
Right.
3, 4, 5, 6, 7 years, right?
Hmm. Yep. Yep. Yep.
Every
Yep.
day, every week,
Hmm.
looking at you're doing your monitoring, looking at your scorecards, making sure people are doing what they're
Hmm.
supposed to do, all that
Right.
stuff. That is a full-time job
Yeah. No. No.
for
Yeah.
many
For
people.
sure. And then understanding the market, because the market shifts on you, right?
Yeah,
It could be, your interest rates if you're getting ready to do a refi. It could be your rents. Are your rents going up? Are they going down? Are they staying flat? How does that compare to what your projections are? What's the market occupancy? Are people, who's your competition? Why are they renovated? Are they not? Is my product better than yours? What's your customer service? I mean, there's a lot of things that go into it that you monitor and you have to set up, and then you just watch it to make sure that it continues to give you what the results are, the results that you're looking for.
yeah, it is literally running a business.
Yeah.
It is
Multiple
literally.
businesses, because each building that you own is a business in itself,
Hmm.
and they operate slightly different. They're slightly different areas. They're slightly different buildings. There's slightly different amenities.
Different properties,
Um,
you mean? That each
yeah,
property is its own
each
business.
building is different. It's like, so if you have 5 buildings, you have 5 businesses
Yeah.
in 5 different areas with 5 different issues, and you just have to understand each one and make the shifts on each one.
Yeah, and I mean, there's a lot to be said about understanding, all right, if I'm gonna focus and I'm gonna do what I do best, I should work with other people that do what they do best, as
Right,
well.
right, exactly, exactly.
Yeah. So, again, as we think about, let's kind of what's in it for the investor. I mean, how do you normally go about educating investors to think about, hey, why would you invest here versus, why does it make sense for them to go into a syndication versus maybe going to put their own money into a property of their own rental,
Right, right.
or I don't know, some exploring some other real estate opportunity.
Right. No, no, that's a good question. So basically, the explanation is not that difficult, right? Sometimes you talk to people and they're looking for they want to buy that one house so that they can make a rental out of it, maybe make a short term rental out of it, or maybe they want to buy a duplex or triplex. And the explanation is not that difficult, because if you have, as an example, one house, and you it becomes vacant, as an example, you have 100% vacancy.
Hmm.
If you do 10 units, like a 10-unit building, you have one vacancy. You have 10% vacancy or 90% occupancy, right? And if you go to a 100-unit building, you have one vacancy, you have 1% vacancy, 99% occupancy. Now, the bigger it is, the less the cash flow fluctuates up and
Totally.
down, right? So when your house becomes empty, now you're paying the mortgage, you're paying the gardener, the pool guy, you're paying for the repairs, and nothing's
Everything.
coming in,
Yeah.
right? Versus, and you don't want to have 100 houses, because 100-unit building gives you economies of scale too. If you have 100 houses, as an example, you have 100 gardeners. Your expense is very high on your landscaping. When you have a one building, you have one gardener that goes there. Yeah, it costs more for that one building, but it's a lot less. So you build economies of scale going big.
Hmm.
The other thing is that, if, let's say, like you mentioned, maybe you're a professional physician, IT, lawyer, you concentrating on your profession, you don't need distractions on something that doesn't make you as much money.
Hmm.
The best bet for you is, like you said earlier, is leave it to the professional. This is what we do. You'll invest with us, you'll be part owner of a building. You don't have to worry about leaking toilets, people moving out, people not paying their rent. We take care of all of that. Your money is working for you. We're providing good returns. Nothing's guaranteed, but historically, we've done really well for our investors. So your money is growing without you having to do anything. You get distributions, and then you get tax benefits that go along with it as well. So as a professional in a different industry, it makes sense to invest this way. You're still investing in real estate, but you're investing with a group that can get larger buildings. So you get economies of scale by putting multiple people together. And you don't have to deal with the so-called headaches of running another business.
Yeah, I I love the breakdown there, and I think that the thing that I have run into, and I've even thought many times in my own too, and I'd love to get your thoughts on this. Is this is my thinking about kind of this next point, which is, but Danny, I'm reading about all this financial stuff, and I'm trying to become more educated financially, and they say rule number one is don't give your trust your experts and just give your money away. I should take more ownership on what I'm supposed to be doing. Why should I go and invest somewhere else? And I'm thinking like, yes, but there are people that actually do I want to be someone who is educated to understand how everything works and know enough to say, okay, this makes sense, have a checklist of what good looks like, check, check,
Mhm.
check, do the sniff test. Okay, cool. Now
Right.
I'm not just giving away my money. I would invest in stocks and bonds and anything else that's reliable as well. And I'd become a
Mhm.
more educated investor. And this makes sense. So it's not that I'm giving my money away from someone and it's just someone else is doing it. There's, magic show here. You don't need to know,
Right.
but I
Right. Right.
am
Right.
becoming more educated and actually investing in the private equity space, which is at one of
Mhm.
the highest levels of education.
Right. Yeah. But here's the thing that, like we talked about a little bit earlier, is the reason why we do it so well is because there's a lot of years of experience there,
Hmm.
right? If you have a different career and all of a sudden the light goes on and you say, hey, you know what, I'm going to read a couple books, I'm going to learn how to invest in multifamily as an example, because you could do mobile home parks, you can do self storage, there's a lot of different asset classes. Either way, whichever one you pick to want to dabble in, you buy books, you look at YouTube, you see how they do it. That's It doesn't work that way, right? We have, having been in it such a long time, we have a network of people that help us. We're working together, right?
Hmm.
We've built the trust, with the attorneys, with the insurance brokers, to get the right insurance on the building. You don't want to be left exposed. There's a lot of details that go into it. A book or two books, or 100 hours of YouTube isn't going to teach you that. And here's the thing is, do you really want to risk your hard-earned money to learn those lessons? Or if you go with somebody, say, such as our group, it's
Hmm.
like we paid our dues already. I'm not saying that we're perfect, because nobody's perfect. But the thing is that because we monitor so closely, we know when we have to make shifts,
Yeah.
and we have to make them. It's not, business plan isn't always played out 100%, but we can see when we have to make the changes, and we make them. It's like a big ship, you're just sailing it, you can't flip it around on an instant. But if you have a storm coming in, then you start shifting in a different direction, and you're able to deliver and see how those shifts work. But because you've done it so many times, okay, I'm going to have to make this shift, and you know that's probably going to work, just because you've done it so many different times.
Yeah, it's such a great point. And having gone through it, really the question in investors' minds, I know it was in mine too, is
Mhm.
how sure am I about this opportunity? How sure am I about the people I'm investing with?
Mhm.
And going through it, like you said, it's, well, not only do you have the experience, but what that ultimately means is you have more certainty on,
Mhm.
hey, we've been down this road, we know what this looks like. And so you
Right.
have much more certainty on it doesn't matter. I know how to doctor. I know how to prescribe these certain things. Like, oh, okay, I know what this looks like. Oh,
Right.
I know how to build this system in tech because, like, oh, I've done this before. We've run
Right.
this project. you know,
Right. Right.
I know this legal argument because I've studied this already, and we've done it for the last 20 years. And so,
Right.
how
Right.
much certainty do you have there? Is the question. And as we talk about that, I don't know if these numbers are still correct, but I was very interested in this from the past deals, and looking at um, the firm as well. But 30 acquisitions, 18 exits, 12 more pending. Is that still the
I
numbers?
think it's 31 acquisitions, 18 exits, and yeah, something like 13 actual deals, something like that. Yeah. And we're actually working on another one right now too. So we're about to put another one under contract.
Okay, so another one after the Phoenix one.
hmm So we'll move it up to 32. Yeah.
Very cool. Very cool. I know it's at least your numbers there. It's about 5% of the amount of properties you look at ever make it to the next step for due diligence, right?
Yeah, it's small, right? It's small, but we're really good at. You can just look at the deal and you're like, no, 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 and then all of a sudden. But here's the thing that we're not going to market deals
Mm-hmm.
anymore, right? Because we don't have to. It's the off market deals that brokers. Because for the brokers, if you think about it, for the brokers, it's like I have a deal. Do I go out to market and deal with 100 people, or do I go to one of these people in my small group of five or however the group is? I present it to them, they'll buy it. My job's easy,
Yeah,
right? I mean, they want surety, they want speed, and so they're going to give it to people that have that relationship with them.
definitely.
Super simple.
Yeah. So from their perspective, they
hmm
don't, going to market, they don't need to go and post this on a
Mm-mm.
website. They
Mm-mm.
say, who's on my whatever version of Rolodex is in
My A
2025.
list, right?
There you
Yeah.
go. A list. I got a couple people on there. Let me shoot it to them first. Shoot the text messages, the email. Hey, Danny and team, check this out. Is this
hmm
something you're interested in? Based on things you told me in the past, I think this fits what you're looking for. That's what
hmm
you're talking about off market.
Right.
Um, uh, Cool. So, all that checks out. It's a deal that you're interested in. You've talked about, the team that you have put together, the financing, the insurance quotes, make sure that it's not just the quotes, but is the structure makes sense on,
hmm hmm
where you think the market will be over the next 4, 5, 6, 7 years to sell. Um, and, does it make sense to, based on what to get the raising capital from there too? Um,
Right.
so from there, it's investors get it on their plate. Someone that's
hmm
talked to you in the past, and like Danny's cool dude. Not only does he know his stuff, but he's definitely the multifamily of uh George Clooney, George
Ah,
Clooney
yeah.
multifamily.
Yeah, yeah, yeah.
So good. Um, and they're ready to invest and go. So what do they get from there? Is that you do quarterly or kind of monthly updates?
We do quarterly updates, so we send out quarterly reports and we do quarterly distributions.
Okay, got it. And
hmm
so, first time investors, second time investors, they're looking to, like you said, leverage someone else's experience, but also learn along the way. You know,
Correct.
I know that's a question that I get a lot from people, which is, cool, I'll invest, but like, how do I learn things? Like, can I talk to you? I'm like, yeah, send questions. Like,
Right, right,
what are
right.
the opportunities for them to learn along the way?
So they learn the reports that we give. Basically, we like to talk about the beginning of the report, talk about the area, so the general market, right? So that maybe they hear news, maybe they don't. What's happening in the area, what's happening in the market as a whole. Are rents going up? Are rents flat? Because all those dynamics change, right? So one, informing them about that. Then the other part is kind of informing them how the operations on the building which is their investment, are going, whether we're doing renovations, what does occupancy look like, what are we doing to change it. And so they get kind of a details on the operations of the building. And then they might be wondering, well, what do the numbers look like, right? So we include reports on the numbers. Are we trending upward? What's causing that trend? Sometimes you can trend the opposite way. Maybe we had, the Christmas hangover and we had to evict a few people, so we have a little bit of a drop. Maybe the market's shifting a little bit, and so they get to see that. The main idea is that we always want to be as transparent as possible and give him the indication of what it is, and what's the cause of the direction of going up, or what's the cause of it staying flat, and what are we doing to try to keep pushing for performance, basically.
Mm-hmm. Awesome. So they do get to learn along the way because they see the reporting on their investment.
Hmm.
It's like having
Correct.
that dashboard, because when we talk about value add and things that you're
Hmm.
doing, the executing the business
Right.
plan. I mean, the business plan is increase the income, lower the expenses.
Right. Yeah, it's really simple, right? Keep people in. What do they? Some people say heads in beds. Keep heads in beds.
Yeah.
Um,
Uh, and so, from that perspective, the learning along the way is that they get to see what the reports are. What's going
mhm.
on? What's that executive
Right.
summary at the top about the market, or that
Right.
just that geographic location, right,
Right.
of where
Yeah.
that property lives. I know we say
Hmm.
market a lot, and I make sure to say the market is, this is just the area where the property is.
Right. Correct.
Um, and you have to learn about that scorecard. How are things
Yeah.
going on? Like you said, is it trending upward?
Hmm.
Rents going or the way we want it to? Are renovations being completed? Have we renegotiated the contracts with the laundry or the security or the landscaping, whatever, to
Hmm. Hmm.
do that too. So they do get to learn along the way.
Right.
Um, uh, and that makes a much more educated investor on the end of that deal too, right?
Oh yeah, yeah. And at the same time, if they ever want to make a call to me and say, hey, listen, I don't understand this, or what do you have going on? Sometimes I'll get those calls from the investors, and I'm always happy to explain what's going on and what we're doing, and that way they're better informed on operations, basically, if they have questions with that too.
Yeah, awesome. I kind of wonder, do you, at this point, being in business for so long, do you have a lot of investors, or do you have vet investors that love to continue to invest in additional deals with you too?
Oh yeah, that's interesting. We just did a refi. We did a $16 million refi. We finished it up, and we were able to pay off one class of
Mm-hmm.
shareholders.
Mm-hmm.
And my question to them, as I call them and I says, hey, we got funds coming to you. Do you guys want to roll it into another deal?
Yeah.
And I'd say probably 80% of them said, yeah, just pick that money up and put it in another deal. So it
That's
happens.
awesome.
I don't want to say it gets easier, but it kind of does get a little bit easier, little by little.
Yeah.
I know I've had some that have done multiple deals. Some have money in this deal and in that deal, and then they just roll it over into a new one. And so it just, yeah, it gets, just keep doing a good job for people, and you'll get better results.
Yeah. I love that it's one of the things I learned a while ago, which is one of the worst things you can do for an investor that you're giving consistent and great returns on is
Hmm.
give them back all of their money. uh,
Yeah. Now I have, like, I'll give an example of one that said, "Hey, listen, since I've been investing with you, my money has doubled."
mhm.
And this is like IRA money, right? So self-directed IRA, they put these self-directed IRAs. They're doing, like, if you're able to double somebody's funds, you can be changing people's lives, right? From retirement standpoint, is where they had a small pot, but over the years you've been able to help that money increase and double, and then that doubles again. It's just like, I mean, it's like cool. It's a cool feeling to be able to do that, because that's what we're doing, and that's why I said in the beginning, we're working for them. You said, like, they're our customers. Yes, they're our customers, and we have to give them results. That's the thing. These deals don't have any guarantees on returns, So it's just solely the responsibility is ours to perform.
Hmm.
And it's a big responsibility when you're talking about other people's money. The last thing you want to do is lose anybody's money.
Of
And
course.
I'll work for free as long as everybody gets paid. Bottom line.
Yeah. I mean, I understand the nothing is guaranteed. We've all had deals that have gone south, unfortunately, especially over the
Hmm.
last couple of years, here and there. Uh, but each deal is different. But
Hmm.
like you're saying, the returns are different, et cetera. But you're talking about doubling someone's money as
Hmm.
well. That's what we're calling equity multiple, right? The amount
Correct.
invested, doubling that. Is that
Yep.
still about the target for the deal criteria that you have right now?
Yeah, for the deals that we do, we wouldn't do any deal if we don't feel confident we can get in there and do 2x for our investors
Got it.
on a
So
conservative basis, right? So if you do that way, we have probably have a chance of doing better than that.
got it. And so on a conservative basis, there's a doubling money at the exit of that deal is
Mhm.
basically what that one liner is.
Correct. Correct. Yeah.
Cool. Most likely better, but shoot, say that this is what we think we can do, can probably do way
Right.
better, but this is what your business plan will target
R-
more
Right.
conservatively.
We want to be wrong as much as we can, going up.
Yes.
Right. Under promise and over deliver.
How's that been? I just wanted to make that crystal clear and really simple to hear because in many stocks and whatnot, you hear, well, on average, et cetera, it will be around 8% per year.
Hmm.
That doesn't include having gone up and then dipping down a lot, right?
Mm.
It's
No.
like, right, it like from anyway, 2 periods of time, things will double, but this is over this life of the deal, which could be what on average for you guys is it about 5-6 years?
Yeah, yeah, that's the target. If we feel comfortable, we can give what we call a 15 IRR for the investor in about a 5-year period. That basically translates to 2x multiple on that. But that's what we're targeting. We can never guarantee we can get that, but we can go like hell to get that and more, basically.
And have a tighter business plan, like you're
Yeah.
saying,
Yeah. Hmm.
leveraging all the experience to get there too.
Hmm. Correct.
Awesome. So over that amount of time, you probably learned a lot about team building and thinking about how you want to, you know, legacy vision for Prime Capit as well, right?
That's right.
Um,
Yeah.
Talk to me a little bit about what your thinking is on how you think about building your teams, working with people, making friends and influencing well, and helping to make your community better too. Do you have a 1, 2, 3, big values that you think of when you are working with people that maybe you've shaped over time?
Yeah. No, for sure. We want to make sure that anybody who's working with us grows with us as well, right? So that's one. Somebody that people that bring skills to the table, or the attitude, right? The hire for attitude, you can teach the skills. So have good people on your team is one. But we're also changing communities, right?
Hmm.
So we're going in and we're buying buildings that haven't been renovated, that aren't running efficiently, and so we're able to clean them up. And sometimes we'll spend like say 25,000 per door, and we'll go in there and do full renovations on the units, all new cabinets, countertops, stainless steel appliances, light fixtures, paint, flooring. And then we also do it on the exterior. We paint the exterior painting. We'll do the landscape. We'll resurface the pools. So we want to provide an improved community for the residents. You're getting on the interior, you're getting on the exterior. Whatever you do on the exterior contributes to what the neighborhood looks like as well. So it's a
Absolutely.
community thing, right? That we're providing to them a better product. And then we're also, like I said earlier, we're helping. people who may not have access, and these are the investors who may not have access to be able to participate in these types of investments that could potentially provide higher returns than what the stock market does,
Mhm.
and being able to go in there and help them. Now, I have, as an example, I have 4 boys. My boys invest in the deals that I do. I got my mom that does, my sisters that do, my cousins that do, friends that do. So it kind of starts there, being able to go back and give back to my own family and help my own family out. And they don't have any access to any of these deals. They don't do anything, kind of like anything like this. So
Mhm.
you're able to go back to the family and say, hey, and that's, that one you can't mess up, right? Because then Thanksgiving dinner is going to be very uncomfortable.
Yes.
So you want it to be a good thing. So you're going to protect that at all costs. So you're very careful and diligent on the types of projects that we pick. And we're also very careful and diligent on the operations to make sure that we deliver.
Yeah. Just so that perspective of, I just want to reemphasize, we talk about this, and I know that for this entire podcast, there's a lot about why these investments for tech professionals, and making sure that we're educating them to find right people that have been in business, have been in, have seen success, who have conservative plans, et cetera, many things you've talked about too. But I think it's so important to reemphasize that not everyone has access to these deals. And even as we
Mm-hmm.
talk about it openly here, to general public, you do have to be an accredited investor, and you should be at that level of education and knowledge to invest well as well. and
Correct.
and so the stakes go higher for when you have family involved in these deals
Mm-hmm.
too, which is that definite extra. It's not like, oh, invest, protect investor money. It's like,
Right.
I'm protecting my family's money.
Yes.
you know
Yeah.
um on that too. So great call. What are some books, or advice? We'll just go with advice, if any of that comes to mind, that you would, say to newer investors looking at making their first, second, or third investment, as they're thinking about, okay, what makes sense? I have looking at the deal. I've been listening to these podcasts, listening to your podcast,
Mm-hmm.
Orange County Power Players. Plug that for you. Is getting educated. It's like, okay, look at the deal, look at the sponsor, look at the market. Do the numbers make sense? Do I have certain things checked off? Of I have more certainty in this, but
Mm-hmm.
everything in my head makes sense, and I'm ready. I'm ready to pull the trigger on this. Or any other words or advice you would say to someone who might be on the fence before making an investment? That
Yeah. One, get to know the person that you're investing with. Know, like, and trust. Right. Ask them what their history is like. Ask them if they had any bad deals. I mean, these are all fair questions, right? And how they went through the bad deals and how they fixed them. Um, their history. You can ask for references. Sometimes I have investors that ask me for references, and I'm happy to give them out, so that they're going to talk to other investors and, hey, how did Danny perform? Um, was he diligent? Was he consistent? Did he provide everything on time? That's key, right? To do your tax returns, your K-1s that you have to hand out. So all these are little things that either get you comfortable, and then at the same time, if I have investors that say, hey, look, I don't know who you are. I'm getting to know you. Can I invest, instead of the minimum being 100,000, can I just do 50,000? I kind of want to take a smaller bite, get to know you, get to see your operations. And I'm like, absolutely, I want to earn your trust. So they want to take you on a test drive. So take them on the test drive, and kind of invest a smaller amount, and then see how they perform. You like the performance, you like the results, then you can scale up from there. Usually, when you do well for the investors, their wallets get wider, and then they start talking and telling their friends at the same time. So somebody who has money usually has other friends that have money, and everybody has friends, and it kind of goes from there.
Yeah, yeah, but definitely do well for them and earn that trust.
Right, right.
um Gotta feel comfortable. Pleasure to have you, Danny. So good. I mean, we covered a lot of information. And I'm so thankful to get to, know you a bit better, have that opportunity just to see you quickly, go to breakfast, and, really learn a lot more about you and how your team is not only doing well, but doing well for communities and for investors too. You have a lot of really good information out there. Where would you like to send people to learn more about you and some of the offerings?
You can two places you can go to. You can go to our website at www.primecapi.com. So primecapi.com. You can go there. And if you want to see, we do a podcast as well. You can also go to ocpowerplayers.com. Check us out there and follow us on your favorite channel.
Awesome. And I'll make sure that those are in the show notes too. So you can just click on it and go right there. Please make sure to like, subscribe, comment on those places Danny mentioned, as well as here. Appreciate you, sir.
Thank you, Steve.
Thanks for joining us on another episode of Path to Passive. We love connecting with our listeners and those on the path to architecting their wealth and improving their lives. Feel free to let us know what topics you'd like to see in future episodes. Get in touch with us through email or Instagram. See you next week for a new episode.